Well, HCL Tech reported a good set of numbers after the strong showing that we saw from TCS and Infosys. HCL Tech too managed to beat expectation as far as top line is concerned, as the constant currency growth came in at 5% versus our expectation of a growth of around 3.2%. The dollar revenue growth came in at 5.3%. We were working with a much lower number because the dollar absolute number came in at 3,244 million as compared to expectation of 3,180 million. Rupee revenue too jumped up by a solid 8%. Not just that, there is a big improvement on the margin front as well. The EBIT margin came in at 19.6%, and that compared with our expectation of just around 18.8%. So big beat coming in on the margin front and an expansion of 160 basis points on a sequential basis. Consequently, the profit is looking much healthier than expected, very close to 4,100 crores versus our expected 3,700 odd crores. Not just that, there is also good news in terms of the other internals. Attrition has cooled off substantially, so 21.7% as compared to 23.8% last quarter, and the TCV continues to be quite steady between that $2 to $2.5 billion mark. The guidance for FY23 has been narrowed. Not a big surprise there, given the fact that they already indicated that growth will be on the lower end of the range of 13.5 to 14.5%. It's now narrowed to 13.5 to 14. As far as EBIT margin is concerned, that too has been narrowed to 18 to 18.5% earlier, though they were quite confident earlier that they'll be in the band of 18 to 19%. And that just tells you that growth in Q4 might be a bit challenged, so that is something that we'll watch out for. But overall, a decent number coming in from HCL Tech.